The North American economy is entering a transitional phase. After years of volatility, from pandemic stimulus to inflation spikes to rapid interest rate hikes, we're now looking at a period of fragile balance. But underneath the surface, the picture is far from stable. In the United States, growth is expected to slow, but remain positive. Consumers are still spending, but the momentum is weaker, credit is tighter, and savings are shrinking, especially for the bottom half of earners. Interest payments on everything from credit cards to mortgages are eating into disposable income. The result? A soft landing is still possible, but it's far from guaranteed. Inflation is down from its peak, but it's not gone. Services inflation, particularly in housing, insurance, and education, remains sticky. The Federal Reserve is cautious. They don't want to reignite inflation, but they also don't want to choke off growth. Most likely, interest rates will stay elevated for longer than people expect, with maybe one cut by mid-2026 if inflation behaves. Meanwhile, the labor market is cooling. Job growth is slower, and wage pressures are easing, but there's no crash yet. The real story lies in business investment. Traditional sectors like retail, logistics, and real estate are stagnant or declining, but investment in AI, automation, and green energy is ramping up. There's a growing split between the old economy and the emerging one. Canada faces many of the same challenges: high household debt, elevated housing costs, and a central bank caught between inflation and stagnation. But unlike the U.S., Canada is more vulnerable to rate hikes because so many mortgages are on short terms. As renewals roll in, many Canadians are seeing their monthly payments double or even triple. Consumer spending is under pressure, and economic growth could flirt with recession. Mexico, by contrast, is benefiting from a quiet boom. Thanks to nearshoring, more manufacturing is shifting from China to Mexico to serve North American markets. Wages are rising, infrastructure is expanding, and investment from U.S. firms is pouring in. If political risks remain contained, Mexico could emerge as a major winner over the next 5 years. Overall, the North American economy is not collapsing, but it is rebalancing. The cost of money is higher, the era of cheap leverage is over, and new sectors are rising while old ones decline. The next year will be defined less by growth and more by adaptation. Those who can pivot, businesses and individuals alike, will find opportunity even in a slowing cycle.